Welcome to Daily Tax Savings. This is Tony Novak here to share a few points on saving taxes and staying out of tax trouble. This is a special edition, I guess I could say, of Daily Tax Savings. You can see I'm not in my usual studio office, but a client asked me to address this question. So I'm sort of killing two birds with one stone, making a recording, going to share it on the usual channel, and then also share it with the client as a direct answer to his question. And the topic is HRA, that's Health Reimbursement Arrangement, and 401k for a sole practitioner business. In this case, by sole practitioner business, we're going to say any sole proprietorship, any one-person business electing treatment as a S corporation, an LLC in that same category, and also a partnership. We're going to lump partnerships in this. If you are a partner, you're considered to be self-employed under various benefit provisions of tax code. So for simplicity, we're just going to lump them all together. What we're not including is a person, an employee shareholder of a C corporation. Benefits for C corporations are different. We're not discussing that here. We're discussing everything else. So a HRA, Health Reimbursement Arrangement, can be a valuable tool to be able to deduct high out-of-pocket health expenses. In this case, I understand there are dental expenses that could run in the range of $15,000 for the client and his spouse, and that is obviously a significant amount of money. If we can provide that through the business without subject to any tax, that would be a substantial benefit, particularly when we consider both self-employment tax and income tax. So the good news is that it can be done, but it's a little bit tricky, and there is some cost associated with that. So we have to consider the cost benefit in any situation like this. So the loophole, and I hate using the word loophole because it implies that it's inconsequential or not well considered. A well-considered provision of tax law, well established, well proven, well documented, and well tested in the courts loophole is that a spouse of a sole proprietor can be an employee of that business and be covered by a health plan, including an HRA. And that employee can then cover their spouse, which is, by coincidence, the business owner, who would not normally be eligible for the HRA benefits. So that's how it's done in this type of case. The requirement is there actually has to be legitimate payroll. I would not risk touching it if we didn't do full payroll accounting, have payroll accounts set up, have that spouse on payroll. I don't think it matters how long or how much the payroll is, but it needs to be there. Second is that an HRA must be under a written document. Now, there are a number of providers that offer that. I actually built my professional reputation decades ago on this very concept, so I'm quite capable of providing sample documents to a client. We don't provide legal advice on them, but I certainly can provide the sample documents that are commonly used by small businesses in this situation. So those two provisions, and just continue the conversation then with the 401k. Yes, there's a great provision for a solo 401k. There are free and low cost ones advertised, but in every case, I always see that it winds up costing some amount of money, if nothing more than to answer questions. A 401k needs a separate tax return once the assets get to a certain size. And so it's not as simple and clear and easy. What I think is that we have to balance the benefits of a SEP IRA type of plan, which requires no paperwork, no administration, no questions, no tax filing, versus the benefits of a solo 401k. We can do that. What does it all come down to? I tell clients, if you're a micro business and you're considering one of these plans and you're considering using a professional to get advice on them, figure that it's going to cost $1,000 for payroll. Figure that it's going to cost $1,000 for the 401k. The HRA can be built right into the payroll system with no additional cost. So in a nutshell, that's what I would say. It's going to cost you $1,000 to set up the HRA. It's going to cost you $1,000 to run a 401k. Would love to hear your thoughts, comments, feedback. We had a little discussion in an accounting group over the weekend where I blasted a low-cost benefits provider for their private data marketing practices. And so, maybe that's a hot topic right now. So we'd love to hear your thoughts, comments, or reach me one-on-one at taxproblems.cpa. I'm happy to set up a no obligation talk. And otherwise, I will be back tomorrow with another tax saving